So what did Dave Ramsey have to say about investing in individual stocks?
This is exactly why we tell people not to buy individual stocks.
Right.
It's exactly why.
I know. And at this point, I've done it, and they're sitting there.
I get that it's water under the bridge, but the first part of this we have to address is never do this again.
Okay, here are three main issues with the comments in this video. Number one, diversification. So diversification is great for protecting your wealth, but it's not great for building your wealth. I'll get to that in a second. One of my favorite quotes from Warren Buffett is, diversification is protection against ignorance. If you don't know what you're doing in the stock market, then don't invest in individual stocks. You should be investing in index funds, ETFs, and mutual funds, essentially a bundle of stocks together that are matching the market, not beating the market. Now, I have to use a football metaphor here since I know Dave Ramsey is a football fan, but you can't win football games only playing defense. For context on that, I live in Wisconsin. I'm a Green Bay Packer fan. We won our last Super Bowl in 2011, but since then, we went many years where we'd be winning a game, we'd get to the fourth quarter, and then we'd shut down our offense and we'd lose. And we did that game after game and year after year. Drove me nuts. Packer fans out there, you know what I'm talking about. Well, that coach has since been fired and replaced. Coming back to you and investing in the markets, you're not going to build your wealth by only playing defense. You need a little offense in there. So that leads up to something we talk about in Tykr is two different strategies for managing your wealth. You have wealth building mode and you have wealth protection mode. Here's the difference. Let's say you're somebody who is still working. You have a timeline to achieve financial independence. It could be 5 years, 10 years, 15 years, or whatever. In that case, you want to be investing in individual stocks, so strong value stocks. In that case, you can get returns that range between 15 and 50% per year. If anybody questions the returns there, you should check out another video I created which talks about how those percentages are achieved. Now, if you're somebody that is at or nearing financial independence or retirement, or let's say you sold a business, sold some real estate, or inherited some capital from a loved one, then you are definitely in wealth protection mode. In that case, you want to invest in index funds, ETFs, and mutual funds, where you're going to match the market. Typically, you want to expect returns ranging between 6 and 8% after inflation. Now, circling back to Warren Buffett, he did not make his first million by diversifying. He had a private limited investment firm where he invested in individual businesses. By doing that, that's where you really accelerate your wealth building process. Of course, later in life, you saw that he diversified. Most millionaires out there do not make their first million by diversifying. You need to be investing in a few strong individual stocks, or maybe your own business if you're an entrepreneur, or in real estate, but you got to stick to that for a long time. So to summarize that point one, diversification is good, but wealth protection mode, not good for wealth building mode. Point number two relates to perspective. So I looked at the date of this video is actually June 13th, 2022. So what was happening at that time? We're in the middle of a recession. In fact, we had an 18-month stretch where the market was severely down. And this guy, this caller, and Dave were talking about this is what happens. This is what happens when you invest in the stock market, and it's your fault. Now, at that point, I would have probably coached the caller and said, well, you're probably freaking out right now, but guess what's happening at the same time? We have a recession, and in that case, you should not be freaking out. You should understand that over the last 100 years, there have been about 19 bear markets or recessions, and the average duration has been about 9 months. This tells us when things are bad, they usually don't stay bad for too long. And number three, this one really upset me. This is a violation of Rule 1 investing. Rule 1, don't lose money. Rule 2, don't forget Rule 1. What that means is you don't sell stocks for loss. Well, guess what Dave Ramsey recommended? He told this guy he should sell his stocks at the bottom of a recession. Now, for context there, when a recession does happen, it's going to pull the market down. It's going to pull a lot of stocks down, but you're going to have the slingshot effect. And the Motley Fool Money talks about this. Rising tide lifts all ships. What happens was when the market corrects, it's going to lift a lot of stocks back up. In fact, a lot of stocks that are not that strong. Well, I would have been telling this guy, sit tight. This recession isn't going to last long, and guess what's going to happen? The market's going to slingshot. If you're in really good businesses, like some of the stocks he mentioned were Meta and Netflix, you're going to see some really solid returns. And if you have some bad businesses, you can ride those up as well. and you can hopefully sell those for profit. So violation of Rule 1 investing, come on. You kidding me? Like, you shouldn't have gone there with this guy. Give the guy some peace of mind. Let him know to just hang tight. And I would have went a step further and said, let's talk about the individual businesses you're investing in and really see if they're worth holding for the long term, or you want to ride them out a little longer and hopefully take a profit. Overall, I still respect Dave Ramsey. He is the expert on debt removal. He is really well respected around the world in that regard. And a lot of people don't know this. His business has a lot of different revenue streams within. It's actually a very well, you could call it an empire in itself. They have a lot of different products, a lot of different services. They have a pretty sizable team of people. And from an entrepreneurial standpoint, if you're somebody that wants to study a private company that's really doing things right, Ramsey Solutions it's an awesome business. But when it comes to investing in stocks, Dave probably isn't your guy. All right, if you like this video, hit that like button. If you want to see more videos like it, hit that subscribe button. And if you want to learn how to invest with confidence on your own, I invite you to join Tykr for free.